Hello, and welcome to Livewires Buy, Hold, Sell. I'm Hans Lee, and one of the hallmarks of a great growth stock is sales growth. Of course, it's hard to be a growth stock unless you're selling more and growing revenues from year to year. So today, we're looking at companies with strong sales growth. Do they still stack up, or have their share prices departed from reality? To find out, we are joined by David Wilson from First Sentier and Joe McCarthy from Elston. First up, we're discussing South32. S32 was spun out of BHP in 2015, and the company is expected to have strong revenue growth over the next 3 years. David, is it a buy, hold, or sell for you?
For us, Hans, the stock's a hold. We still think the underlying assets aren't particularly strong. They're actually sort of quite short run. There's a fair bit of sort of capex still required to actually sort of grow the business from here. And also the alumina prices also sort of backed up as well. So for us, it's a hold.
Okay, Joe, the share price barely moved over the last year, only up about 1%. I guess that's not a bad result compared to other commodity names, but what do you think? Buy, hold, or sell?
Yeah, look, it's a hold for me. We think their assets are okay, but again, the life of them is not encouraging. One thing we do think is with the Worsley alumina smelter, the strategy behind bringing bauxite to that is, it's good what they're doing with that, and we think it'll be more reliable. But probably what concerns us is some of the assets, it's either the location of them in terms of geopolitical risk, and also just the cost competitiveness of them. And we think that's a risk to profitability throughout the cycle. And we want someone that's a bit stronger than that.
Yeah, no, fair enough. Next up, we're discussing Xero, the Wellington-born small business accounting platform that now has 4 million subscribers all over the world. Joe, I'm going to stay with you. Is it a buy, hold, or sell?
So it's a buy for me. And the reason for that is, in the recent results that we've seen from that business, the customer acquisition spend, specifically in the international part of the business, has definitely improved. Previously, is a bit subpar and actually a bit of a reason not to own it because that was their big growth option. In addition to that, they've also gotten their group overhead costs under control, and they're running a more sustainable P&L, and, which is a really good job by management there.
Okay, Joe, thank you very much. David, the share price is up a very punchy 60% over the past 12 months, but what do you say? Is it a buy, hold, or sell?
Despite that, we actually agree with Joe. We think the stock's a buy. Basically, the way you sort of break the company down is you've got an excellent Australian business that's very profitable, generating a lot of cash. You've got a UK business that's also very strong, but it's now sort of getting some momentum as well. So that's very encouraging. And importantly, the new management team is actually sort of restructured the team that they've got in North America. And so we think there's ample opportunity for them to grow. So we think very much in place to actually take the business forward over the next sort of 5 to 10 years. So for us, it's a buy.
Okay. Let's have a look now at Seek, the job ads platform that's leveraged its business here in Australia, and it's made expansions overseas with varying degrees of success. David, to you, is this one a buy, hold, or sell?
Hans, this one's a sell. It's a company that's really struggled to generate earnings growth. To put it in some perspective, over the last 10 years, its EPS is down 25%. You compare that with REA and Car Group, and you're talking, EPS is up 2 to 3 times over that sort of over that period. Combined with that, we weren't a fan of the sale of the growth assets into the externally managed fund as well. So for us, it's a sell.
Joe, David makes a good point, and it does show in the share price. It's down around 12% over the last year. While sales growth was up 43% in the 3 years prior to last year, it was actually down 6% in the last 12 months. So given all of that, buy, hold, or sell for you?
It's a buy for me, but I think that's completely fair. Take on what David said, I agree with that actually, but I actually feel like management's listening to the shareholders. And there's 3 things that's changed my mind about this business, because I was probably a sell, at least a year ago. What we've seen is proof of pricing power. So they've increased the monetization of their ads, and they're actually increasing market share, which is quite impressive. Secondly, it's on the cost control side of things. They've shown a genuine commitment to actually rewarding long-term shareholders with some margin expansion, and they've got cost targets that management can be held to account to. Mm-hmm. And lastly, they've cleaned up the financials. So if you go back 2 years, quite frankly, it was just a mess. And the only thing I'd say with the business is it is one where it is a bit macro sensitive. So you do need to look at that, and we all have our concerns about it. But we look at job ads in the key markets. They're below the long-term trend, but we actually think over time that will normalise.
Hey, it wouldn't be an episode of Buy, Hold, Sell if we didn't get some picks from our guests. So let's get some picks from our guests. Joe, what is an ASX stock that you like that has had and will likely continue to have strong sales growth?
So for me, it's James Hardie. As a business, they have the best fibre cement product servicing the US exterior siding industry. What makes it good is they provide the best trade-off between the durability and also the look. And in addition to that, it's actually a very affordable product. So it's probably one of the, in terms of the full life cycle of owning that product on the side of your house, it's probably one of the cheaper options out there. On top of that, it's the levers for growth they've got. So you've got product expansion, which they've already done a good job of, expansion into new markets, which is a key feature of their recovery from the 22 lows. And you've also got just market share gains within existing markets. And on the macro side as well, again, it can be a bit of a volatile one. It makes us all a bit nervous, but with that business there, the thesis doesn't rely on a recovery in the US home building market. But if that does happen, it'll really turbocharge the growth.
Yep. Okay. So James Hardy there for Joe. David, what about you? What have you brought for us?
Well, we actually like James Hardy as well, but it's not the stock we're going to talk about. But we think James Hardy, it's a business that we've owned for many years. So we actually agree 100% with Joe around James Hardy. For us, the stock that we want to talk to is Technology One. Again, another great Australian tech success story. A bit like Xero, a bit like WiseTech. This one's been a sort of slower burn, but it's growing revenues at sort of 15 to 20%. Got a great business in Australia supporting local councils and also universities, and they're now growing that business into the UK. And so we think that it's a very sort of durable earnings growth that the company's going to be able to deliver.
We completely agree with David on that as well.
We're all in agreement up here. Fantastic.
But we didn't agree on Seek.
Well, we didn't agree with Seek. True. That's all we've got time for today. We'll see you next time for more Buy, Hold, Sell. If you've enjoyed the program, please give us a like. And you can also subscribe to the Live Wire Markets YouTube channel as well as our website where there's more great content. Until we see you next time, thanks for watching and we'll see you around. Bye-bye.